All right, welcome back to our Basic Legal Concepts series. This is where us as attorneys are talking about some basic legal concepts. We're not giving you legal advice, we're just giving you some information. If you want to learn more about these concepts, you can give us a contact in the link below in the description and we can talk more about it. What is a partnership? What is the difference between a partnership? Is it an LLC? Is it a company? What is it? A partnership is just a contract, it's just an agreement between two parties. That's all it is. From the tax perspective, the IRS treats it as disregarded. That means all the income, instead of being taxed twice, it goes straight up to the partners. It's called disregarded or flow through. This means that when you have a corporation, you might have heard of something called corporate tax. That means your entity is paying taxes itself, and then it makes distributions to its shareholders. In a partnership, everything flows straight through. And so you're issued what's called a K-1 at the end of each quarter if you're a partner, and that reflects the income and the loss, and the IRS can tax you on that income and a loss. A partnership is a great advantage because it's very flexible. It's something that you can do with your friends and family or set up something. You can have an LLC that's taxed as a partnership. All you have to do is have more than one person in the LLC. If you submit a form to the IRS that forms an LLC with two members, they will automatically treat it as a partnership because there's more than two people. So a partnership is a default tax classification for an LLC that has more than one member. Another advantage of partnerships is you can sell them much easier. S-corps, which we'll talk about in a minute, are much harder to sell. It's treated as a kind of a corporation, kind of disregarded. It's kind of a half and half. It's kind of a hybrid setup. With a partnership, it's just disregarded. You can switch it and sell it to whatever party you want without having to deal with a sale issue and a realization of income tax, et cetera, and all the stuff that you deal with an S-corp. We typically recommend keeping it as a partnership, even though there's advantages to having an S-corp too. Profits and losses. How do you deal with those in a partnership? Well, the cool thing about partnerships is it's very flexible. You can allocate profit to this person, loss to this person. If one person contributes land, the other person contributes labor, you have to keep track of that in what's called a capital account. So the IRS is fine with allocating different things to different partners as long as the value is properly allocated and properly tracked. This is why if you have a partnership that's actually moving a lot of product or buying a lot of land or whatever it is, it's important to have a good accountant, a good bookkeeper, a good CPA that is maintaining those capital accounts properly, because the IRS will come after you if they're not maintained properly. There's a lot of flexibility in a partnership. That's why people like them. You can come to somebody that has money and say, look, I'm going to do the work, but you put in the money. And you can allocate that properly in a partnership. As long as it's reflected in the partnership agreement, it's great. That's why it's great, because it's so flexible and you don't have to have only one class of stock like you have in an S-corp. That's one huge advantage to partnership, and that's one reason that we recommend it for a lot of our family offices and a lot of our entrepreneurs and business people. If you have questions about partnership agreements, setting up a partnership, getting it done right, you can come talk to our firm and we can discuss your situation and hopefully give you more advanced legal advice in that scenario. Thanks. See you in the next one.